So hello friends, welcome once again to the Weekly High with LHD show. Along with my co-host El Subramaniam, we have with us this week Ajeet Khurana, a Bitcoin and blockchain expert. He's currently a partner and global expert with the Blockchain Founders Fund and a mentor at MOX, which is a mobile-only accelerator, a global accelerator for cross-border mobile internet, which is operated by the VC firm SOSV. Among his many earlier roles, he was also CEO of Bitcoin exchange Zebpay in Singapore and head of the Blockchain and Cryptocurrency Committee of the IAMAI. So before we pick his brains on the subject, we should, keeping with this format of the show, first discuss some major tech developments of the week. Let's just look at some slides first. If you look at what's hot this week, we have the data breach that would cost top global brands $223 billion. This is a report by Infosys and Interbrand. When we're talking about data breaches, basically the report has gone in a bit of a detail, and it is saying basically that industries such as technology, BFSI, automotive will suffer higher overall brand value at risk from data breaches, whereas luxury brands and consumer goods will face greater value at risk as a percentage of their net income. So they have put out some numbers. They're saying the technology sector shows up to $29 billion in brand value risk, which is up to 53% of their 2020 net income. This is followed by financial services, which is up to 52% of their 2020 net income. And the automotive sector shows up to 77% of the 2020 net income. This works out to about $4.2 billion in brand value risk. Of course, all have covered this particular topic in detail, so I'm not getting much into this. But a related topic is, of course, the Solarwinds hacking fallout. Now, here basically we are talking about on-premise, this Solarwinds hacking issue. We have already discussed it because this is more about cybercrime that we have discussed, but it has sort of escalated more into a kind of a debate, not only about cybercrime, but more into the whether we should be using on-premise or hybrid cloud or a public cloud. Let's first talk about this because this is the way I understand the industry is moving more towards the hybrid cloud kind of stuff. And Brad Smith has made the statement that saying that most of the breaches that have taken place on-premise. So perhaps cloud is far more secure. What are your thoughts, Ajeet, Subbu, anybody?
I'll just tell you a very interesting historical perspective that as we moved from client-server architecture in the early 90s, which was, that's when I was a student of engineering, to the late 90s where cloud became the new buzzword. Everybody knew that cloud was great, and these architectures such as public, private, and hybrid, these words hadn't yet come about. But when an infrastructure provider would talk to, let's say, a financial institution and try to sell them a cloud, they would say, great, we love it. Set up a cloud in my office. And then they say, no, that's not how a cloud works, which was the first version probably of on-prem. So this fear that if I let my data reside on physical hardware, which is not in my control, I have basically lost control of that data, has been there since day one. And this is what I think eventually led to the concept of hybrid cloud. I just wanted to throw in that entire historical perspective, leave alone the fact that in several jurisdictions, there is a need for data to be located in a particular place. Usually that is within the country as opposed to within the organization. But I think that this story is not getting over anytime soon. Whenever a data breach occurs, instead of looking at how the data breach occurred, which means was it on-prem versus on the remotely located cloud, people automatically assumed it's on the remotely located cloud, right? So that is pretty crazy. And I don't have an opinion. I think that if the data is honey-potted, namely centralized, there is a greater opportunity to actually control it and protect it, right? While if it is on-prem, it is just at so many locations that it is more difficult to control it. But I don't know where this whole thing is going. I think it's just getting started.
Not necessarily the most optimal solution. But neither is on-prem. You are looking at some kind of a hybrid at some stage. Human beings, enterprises need to have that visible control. That what we call apparent control. But it is a moot point whether you have the server in your lab on your lab. You're still going to have control, because the hacker out there is not going to come and hack your lab. He's going to hack the computer.
Yeah, I found that strange, because that became a kind of an either-or situation, which I don't think it should be an either-or situation.
It cannot be. It can never be.
Yeah, I think it's a very clear thing, because it should not be a Microsoft or a Microsoft and Amazon web services versus a Dell or an IBM. It just should not be that way. I mean, it has to be clearly, as even Ajeet also pointed out, that security is important. But I think
Leslie,
yeah, please.
Leslie, for your viewers who may want to enjoy an analogy, let us say there are 1,000 people, each of who are carrying around 1 lakh rupees on their self, maybe in their pocket, wallet, purse, etc., and saying, I'm going to control my 1 lakh rupees, because I'm going to physically hold on to it. I'm going to put it behind lock and key. I'm going to hold a gun in my hand and protect my 1 lakh rupees. Or all 1,000 of these put it in a bank vault, which would be a 10 crore rupee bank vault, and they say, let us protect that vault. Now, I want people to use their own judgment and find out that on the whole, which is likely to yield a superior outcome, right, in terms of security.
All things being equal.
Yes, all other things being equal, which is never the case, but at least at an architecture and construct level, you can decide that while you're not holding those 1 lakh rupees in your hand, you put it in a bank vault which you don't control anymore, which is a more superior architecture.
And of course, today, I think when we're talking about cybersecurity, they're also talking about security in the device itself, at the root itself. I mean, of course, there are so many approaches, and I think there are quite a few experts. And we have also debated the subject on earlier episodes. But having said that, we would probably segue into something that is closer to your heart, and which, of course, is very related to cybersecurity also, before we get into the NFT part of it. A lot of talk is happening on blockchain from a cybersecurity point of view. So can you just explain the whole relationship to your viewers, make it as simple as possible?
Correct. So when it comes to security, there are fundamentally two dimensions to it. One is people accessing information that they should not. This is not necessarily what blockchain solves. And the second is people altering data or creating wrong data by corrupting the database or accessing it. This is the problem that blockchain solves. Very loosely, suppose a bank has one computer which has all of the data, and somebody accesses this computer and changes it. You've corrupted the data. So a bank would typically make many copies of this data, which is constantly being synced with each other. This becomes a little more difficult to break into, because you would have to break into more than one computer. Now just imagine this is happening over a very large number of computers who don't even know about the existence of each other, which means you can't switch on something and say, okay, I have 17 nodes or mirror copies or what have you. This is fundamentally the architecture of a public blockchain. Whenever we say blockchain, I must tell your viewers that we are automatically referring to a public blockchain, but there are, like in the case of cloud, there are other models around blockchain also.
Yeah, the
so
closed
blockchain
ones.
Fundamentally is that's correct. So a blockchain is a database structure, as in a very simplistic form, I'll tell you.
But one second,
inefficient.
I would like to interject over here. So if we are talking about a public blockchain versus a closed loop kind of stuff, something akin to an internet and an intranet kind of stuff, if I were to do an analogy, is it really a blockchain in the real sense of the word? A closed kind of.
So the thing is that all the joys and that we talk about a blockchain are largely missing in a private blockchain, except that if, let us say, all banks of India get together and create a closed user group of a blockchain,
which they already have.
These participants are adequate in number, like not 5 but 500, and second, they operate independent of each other, I think that some simulation of a blockchain is arrived at. And even in this architecture, more than 50% of them would have to act in a malified fashion to be able to corrupt the blockchain. So if 50% is a large enough number, as opposed to, let's say, all the police stations in the country get onto a blockchain. Despite the fact that there might be like tens of thousands of nodes, but they might all be controlled by one person. So it is also that these nodes need to act independent of each other and without a central control. So I think that yes, to some extent, it starts looking like a blockchain, but nothing like the a million node blockchain that a Bitcoin probably is.
But in India, you already have banks that already have that. I mean, the bank chain, if I'm not mistaken, and then plus another, uh, I mean, Prime Chain has come out with another blockchain stuff. So you already have banks in India that are already using the closed loop blockchains. How effective are these at this point in time?
So in terms of efficiency, we all know that blockchain is a very inferior form when it comes to efficiency, because it completely sacrifices speed and efficiency in the favor of creating duplicate entries in a very large number. So to that extent, I think it is security wise, security of the original data, which is referred to as immutability. Immutability wise, it is better than the centralized database structure where one super user can go and change whatever they want to change. But I fear that we have, instead of gaining the best of both worlds, we may have inherited the worst of both worlds by giving up a lot of inefficiency but only doing marginally better when it comes to security.
So, question here, Ajit, is that you just said that, worst of both the worlds. So, have we given up too much autonomy, or have we kind of said that, each of these nodes, is independent by and of itself, and therefore control is also distributed to that extent?
So let us just say we have one centralized database. The good thing about it is we can totally control it. Bad thing is one bad actor can come and corrupt this data. As we go from 1 to 2 to 3 to 4, as in small numbers, actually you might be reducing the quality of your security by giving up autonomy. Because now you may have been a good actor, but the second or third person may not be. But as you increase this number by a very large number, let's say running into hundreds, thousands, and tens of thousands, the fact that 50% of them would actually be bad, and bad in the same way, becomes low again. So this is my problem with the worst of both worlds, that while we are headed towards autonomy, the number of players are not large enough when they are acting independently for us to feel secure that they could not collude to corrupt the data. Uh, I must tell you that when you look at a client server or otherwise computer network architecture, you have that many points of vulnerability as the number of nodes. Blockchain is the opposite. As the number of nodes increase, actually it becomes more secure because no individual node has enough power to do anything about it. So it really, so to the exact answer to your question, Subbu, would be that it really depends upon the intent of the participants. If the intent of most participants is genuine, then this serves the same purpose as a public blockchain. But if you could assume that, then this discussion around cybersecurity would not have existed.
Would not be there. Exactly the point. I mean, so you're trading off, speed and efficiency and gaining security. Is that it?
That is it. But it is not like you're giving up 50% efficiency and you're going half the efficiency and double of this. The relationship is non-linear. So I think we may have found ourselves that we have given up a lot of the efficiency and not really compensated by adequate security.
But Ajit, there are companies that are already working on the speed aspect, if I'm not mistaken, and the speed today is pretty comparable to any other chain. I mean, of course, it may not be commercial operations, but I remember that a lot of pilots were being done on the speed part of it.
So you should know that fundamentally, if you're looking at changing the speed of blockchain by many orders of magnitude, not a little bit, but very much more, this regrettably can only be achieved by the sidechain architecture. So what happens is that there is a main blockchain, and then there are participants who are talking to each other off chain, which periodically come and access the main chain. While this does achieve that objective, it is very similar to if you go to a restaurant, you eat food before paying the money. So the restaurant runs the risk that you may never pay the money. But since that amount at risk is very small, we are all comfortable taking that risk. Right. So this is the concept of a sidechain, that there could be corruption in that sidechain because it does not have the protection of a blockchain. But before it becomes too large, you come into the blockchain either by leaving a thumbprint, which is also called a hash key, or by writing all the entries. But this kind of again removes some of the joy of the blockchain.
So it's like you're going on a highway and then you take a smaller route and you come back onto the highway.
That is correct. That is correct.
Okay, interesting. I remember this having this conversation with you on a couple of occasions earlier. I mean, this was almost like 3, 4 years back, and we were talking about Bitcoin and blockchain, and you said no, the both are inseparable. I mean, because so I very distinctly remember that because even now I find that the media will still harp on blockchain as a separate entity and Bitcoin as a separate entity. So can you just clarify this? I mean, for once and for all, I mean, let people understand that why these two are inseparable. Why the token is.
Yeah. So let us say banks of India have to run their technical architecture so that they can allow net banking, login, and those kind of things. They have to set up very large number of computers and spend a lot of money on the hardware, software, and electricity. In a public blockchain architecture, since there is no central authority, who is running all these computers, software, hardware, and electricity, and who is bearing the cost? Individual participants are who don't own the network. So then in that case, what is their incentive to spend that money, which otherwise a central authority would have spent? And that's question number one. And question number two, how do you incentivize them, not just economically, but also to behave well, which would otherwise be called governance? So incentive and governance, how is it maintained? It is maintained by periodically rewarding participants with a token. Now, what the value of this token is, we could call this token Bitcoin, or in another blockchain, we could call it some other name. What this value is actually determined by the market. So we will not get into that at this point, because I'm sure we will be coming to the $60,000 Bitcoin in a moment.
Oh yes.
But but to reward the participants to contribute, physically contribute their hardware and money and electricity, you have to give them a token as a reward. And so this token, one of the names of this token is Bitcoin on the Bitcoin public blockchain. And then there could be others, because people believe that by participating in it, they have a probability of getting such token, which might be worth something. If you remove such token, then the only way you can incentivize or govern this blockchain is if there is somebody who is bearing the cost. This is called a private blockchain. So for example, if Reserve Bank of India were to run a blockchain for all the banks, well, the banks or the Reserve Bank or some central authority would pay for it. In this case, you don't need the Bitcoin or the token, but then you have removed the joy of a distributed ledger, which is truly immutable.
So this would be applicable, whatever you have been arguing so far, the point of view that you have presented at this point in time would make sense in the context of what India is trying, or even the world, the CBDCs, basically the whole digital currency that we're trying to create. And when I look at the Bitcoin scenario in India, I see it always like it's kabhi haan, kabhi na. So you do not know whether it is being banned, whether it is not being banned, whether it is here to stay. Subhu is throwing up his hands in despair.
I mean, this has been a primordial question which I have, that is Bitcoin banned or not? I mean, sometimes the government says it is not banned, but then the Honorable Supreme Court turns around and says you should do something about it. Now the problem with Bitcoin is that everybody seems to believe that it is required. It's the elephant in the room, okay? But nobody wants to really call it out. So, and that has been a reality that has been staring at us. And I don't know whether we are anyway closer to a solution there than we were 5 months ago. The same rhetoric repeating again and again.
Yeah, I think the latest is that Nirmala Sitharaman, she is saying basically that we may not ban it, but we may have some kind of curbs. Ajit, your thoughts?
So I would say, it's important to look at the asset in on one side, and the market mechanisms and players on the other side. So if just to draw an analogy for those who may not understand Bitcoin very well, let's think of diamond as an asset. So by itself, there is nothing wrong with a diamond that you would object to it. But maybe the participants might sell fake diamonds. They might create some sort of a Ponzi scheme around a diamond. So these market mechanisms definitely have to be regulated. Grading has to be brought in, etc. So I think that same is probably true about Bitcoin. The asset by itself, we discussed a second back about, it's a token created to incentivize and govern a public blockchain. So it is pretty innocent an asset. Let's put it that way. But because there is a market price which is going as an unbelievably high, this is leading a lot of market participants to behave very strangely, which would obviously cause worry amongst the regulator and the government, who on the one hand may believe that Bitcoin might undermine the Indian rupee or the sovereign currency itself. That could be a problem on one hand. On the other hand, it could be that we will never be able to track it because it is not leaving a trail into the banking system or the monetary system in general. And as a result, we won't know who is making profit, who is not paying taxes.
You made a very interesting point. You made a very interesting point here that it cannot be tracked. So the point is, like, if somebody like I know people who have actually sold Bitcoin because of all the impasse in India. They are not sure whether they should be keeping Bitcoins or not. So they have sold it for real huge amount and transferred it to exchanges in the US. Now, if I recollect rightly, and correct me over here, I think that Bitcoin is treated as income in India, so it's taxable as of now. So how do they actually, if they can't trace it from, how will the banks, if there's no trace in the bank as such, how are you going to even treat it as income, or how would you know that the person has sold it in the first place?
So there are two ways to do it, and you should know that other countries who have probably been more positive have reached a point to understand this. Basically, because the identity association is not with a person but with a public key. So let's usually call it a login ID, if I may just use it in a rudimentary fashion. Every regulator should, unless they believe they can actually truly ban it, which means they can wish it away. But short of that, what they should do is they should encourage the lit pools and discourage the dark pools. So dark pools are, away from the view of anybody because they are happening between two parties who know each other and nobody else knows them. Lit pools would be exchanges where there is KYC and the like. So for example, Indian exchanges will take your Aadhaar card and PAN card and everything, to open an account. So if a large proportion of people operate in lit pools because the government says this is okay, this is not okay, and there is a fear of law which would cause people to agree with this, then you can test these people because you can get the data from the exchanges. Here is the second and more interesting part, which probably has no analogy in any other asset class. That suppose I have undisclosed Bitcoin. I give it to you, Leslie. Leslie, you give it to Subbu, and Subbu gives it to somebody else who goes and sells it on an exchange. So the fourth jump was in a lit pool, was the first three were not. Even then, because Subbu went and sold it on an exchange, we can reach Subbu because of his KYC with the exchange. Then we can ask
and
Subbu,
then
where
work
did you
backwards.
get it from? Yeah. So because this is an immutable ledger where every transaction is recorded forever, even if within a few jumps there is a lit pool, you can actually retrace the steps. And when you look at AML activity being done on the blockchain assets, all of them are using this, and usually they go back 5 hops to see whether this is clean Bitcoin or not. So I think that as long as you keep encouraging lit pools, you will be able to keep track.
So viewers, Ajit just used the word AML, the term AML. For those who aren't machine learning, it's not machine learning, it's anti-money laundering.
Anti-money laundering.
So, just to be clear. And of course, from the token point of view, it's already reached $60,000. I think a couple of weeks back, we were talking about $40,000. So this is like a
if you remember, Leslie, the first time we started this show, it had reached $20,000. And we said that it's going to breach $100,000 by end of the year. Now I don't know. I don't know what. See, I think Ajeet, one of the issues that you raised was that the government being unsure and as to they can't wish it away. And my sense is that government world over are trying to figure out their piece of action in this entire game, and that they're not able to figure out because they're not able to figure out how to make money out of that, and somebody else is making money according to them. There is an enormous amount of disquiet, and like you said, and the other issue, and which is again repeated itself all over again, is that it is a sheer inability of the legal law enforcement framework to come to terms with technology. It's happening all over, whether it's a Facebook issue, whether it's crypto. It is just that technology is going so fast that our societal frameworks are not able to keep pace with it. And that is what is creating an enormous amount of consternation amongst the lawmakers.
Oh, absolutely. So first there is technological innovation, then there is financial innovation, and then this brings about fintech. So for instance, when there is financial innovation, the first people to adopt it will typically be the island nations, which are regarded as either banking havens or tax havens or financial service havens, because frankly, that is their only export, because
Correct.
they really they're just a dot on the map. And when these people adopt financial innovation, the rest of the world starts thinking there's something wrong with it, which is why I'm desisting from naming any nation because they are good nations. I have interacted with them, but so that is you're absolutely right. That okay, the first thing that happens is that you assume it doesn't exist. Like Bitcoin has been there now for 12 years, 11, 12 years, right? So for the first 4 or 5 years, nobody talked about it. You didn't hear that, oh, it consumes so much energy, and it was just something somebody was doing for 4 or 5 years. That
And
is the crazy
nobody
part. Like,
and nobody still knows who Satoshi is.
yeah, I must publicly declare to your viewers that I am not Satoshi Nakamoto. Yeah, that so until Bitcoin reached the price of about $1,000 in the late 2016, frankly, nobody talked about it. Okay, there was probably one RBI warning that stay away from
Yeah,
dangerous
treat it with
assets.
caution.
Treat it with caution.
Yeah.
But it was only so first you don't exist for me. Then I look at you and deride you. Then I get scared of you and fight you. And then I accept you. So we are now at that third phase and hopefully soon reaching the fourth phase. It has happened, right? Now, currently, Netflix and OTT platforms are encountering that the fight part has
Yes.
started. Social media has gone through that. Digital wallets have gone through that in India. Insurance companies, mutual funds have gone through that in the early to mid 90s, etc.
Yeah, we
Yeah,
are
I mean, what
already.
you said is very dangerously similar to an Indian Saas Bahu serial. Yeah, you, you wish it away, and finally accept it.
Yeah, I mean, what we don't
Yeah.
understand, we always are scared of what we don't understand. So that's fine.
But Leslie, interestingly, one thing I must say that I just got a call from somebody yesterday. Uh, he's an Indian who's been trading in crypto, and he is now emigrating out of India because he doesn't know whether crypto is banned or not. So he's going out of India and going to live, settle somewhere in a country that shall not be named. Okay. Because he's saying that, look, I don't know. Tomorrow the cops come and
Yeah,
say that, it's banned. I lose all the money that I've invested in. So this is another trend that is happening. I mean, I wish somebody could clarify it.
yeah, you
Either
have
say
Ajit.
yes or say no.
No, not from the government point of view, but from a understanding point of view.
No, so I must tell you, Subbu, that it is not that one friend of yours who said this. The entire cryptosphere, which does not include just people who have invested in Bitcoin, but they might be token issuer, infrastructure provider, etc. Everybody is talking to immigration consultants, second passport consultants, and all of those that, what if we need to run suddenly? And it has gone so far that several people are saying, if we run in the face of adverse regulation, we look like a Vijay Mallya. So maybe
Yeah.
we should go sooner than that,
Exactly.
right? So we could be encountering a huge brain drain in the next few weeks and months.
Wow.
Well, I just simply hope that it doesn't happen. But in the meanwhile, let's go to a related topic, which are the NFTs or the non-fungible tokens. Now, before I ask Ajit to explain it to our viewers, I'm just sharing a slide for the benefit of our viewers so that they actually understand what this means. Because it is essentially a kind of a topic that is a little dense. So, one second. Yeah. So why NFTs are making headlines? Basically because this digital artist people recently sold an artwork for nearly 70, I mean, it was $69 million.
69 million, yeah.
Yeah. And Jack Dorsey is auctioning his first ever tweet as an NFT with the top bidder willing to pay $2.5 million for it. So that's why NFTs are making news. And what are NFTs? So Basically, they are cryptographically generated tokens similar to what we are talking about. They use blockchain technology, but they are not cryptocurrencies, either like Bitcoin, Ether, Monero, whatever. You cannot exchange them on NFT. You cannot exchange NFTs, only buy and sell it on special marketplaces, something that Ajit will clarify now. And a creator can use platforms like Rarible or OpenSea to upload the file that will become the NFT. You'll have to pay a fee of less than $30 per file in cryptocurrencies. Once the NFT is on the platform, then you can sell it. You also have an option of setting a percentage, and you can receive from all the future sales of the file. Of course, the question that here, which I would like to ask Ajit also, the sense that I get is that the metadata is not shared on the blockchain. Some of the exchanges are not the blockchain is not capturing the metadata. So that could be a problem. But before we come to that final point of it, why are you excited about NFTs? What would you like to tell the viewers out here?
I think that NFTs as a concept are today at the same stage as Bitcoin was in 2014, which means there was some understanding of it, a very highly oversimplified understanding, and a general sense of disbelief that, oh, here comes another piece of nonsense, right? So that is roughly the stage that NFTs are at. But they, other than the crypto asset component, frankly, NFTs are a very different breed than tokens, payment tokens, or infrastructure tokens, or security tokens. So one thing I would like to tell your viewers, that non-fungible assets, forget the tokens bit, non-fungible assets have been there since whatever. So if I draw a painting, it is this specific painting which is my painting. You can draw another painting which may be worth more, less, or nothing, but it is non-fungible, which means you cannot replace one with the other. As opposed to, let's say, a 2,000 rupee note, where if I have a 2,000 rupee note and you have one, and we just swap it, no change has taken place, because we still both have 2,000 rupees note, because currency notes are fungible. So non-fungible assets have been there forever. So if Winston Churchill or Mahatma Gandhi had written a letter to somebody, and that letter is today available, it can potentially be sold for some market value. And hence, Jack Dorsey's first tweet, in a similar vein, could be considered to have value. The challenge arises because when it comes to physical objects, like a paper letter written by Mahatma Gandhi, it might be easy to understand why there is value, while the same thing in digital version may be little more difficult to understand, but should not be. For instance, as long back as 20 years ago, I have attended photography exhibitions where the photographer is selling the prints of their photograph. And I'm like, you know what? Why would I pay 9,000 rupees for that photograph when I can photograph it, or just take it and make a photocopy which would cost me 1 rupee or 5 rupees, etc. The idea is that even though that photograph was replicable, it did represent the abilities of the photographer to create it and market it. So the fact that, so effectively for the photographer, it was a digital asset which could be reproduced any number of times, right? So the fact that Dorsey's tweet is worth something is easily understood. The fact that it is digital, still worth something, does not require too much of a stretch of imagination. The challenge has come in the third part, and that is that it now seems that you don't have to be a Mahatma Gandhi or a Dorsey. You can be you and me, and potentially create non-fungible assets which have a market price as much as $69 million. It is very important to note who bought, as in who paid the $69 million. I think that is not talked about enough, because if it was an idiot, who really thought I'll buy 69 million and sell for 6.9 billion or something like that, then you could say, this guy is suffering from acute FOMO, which is fear of missing out. But note, it was a financial institution, a fund that actually bought it, who used some wisdom. Now, whether the wisdom was right or wrong, time will tell. But I'm just saying that it is not just the non-suave person. It is also the Elon Musk who is putting money into these new assets. It is also the Wall Street guy. Yeah, Subbu.
So here is a question. So let's say that I have a audio recording, okay, an audio recording of a global industry CEO who in 95 told me personally that I don't think internet is going to make any difference to our lives. Now that audio recording, can it be classified as a non-fungible asset?
It is absolutely a non-fungible asset without getting into a discussion about who owns it, whether you own it because of possessing it or that guy. So without the copyright aspect of it, you can definitely tokenize it, which means, and by the way, every asset which can be in digital form can be tokenized. So you can write it on the Ethereum blockchain. In the visual that Leslie showed, he said that it might take up to $30. The real number is varies, and it can go as low as $6 in practical terms, and has gone as close to $80 in recent terms, depending on network traffic. But yes, you could tokenize it and put it up for sale, and because it is programmatically being sold, you could also say that every time it changes hands, whatever was the fee paid, a certain percentage, let's say 10%, is evolving to be the unanimous consensus, should come to you. So yes, you could do it.
Okay, great. Thank you.
And,
I got a
I
new
don't
source of
think
income.
Subbu, I don't think your question was very hypothetical.
no,
It
he had
was
a
an
wicked
industry
thought. Yeah.
question in 95.
No,
I think it is real, it's happening.
yeah, even I have that suspicion he's going to do something with. I
Well,
have a
I actually
suspicion that
have an
he
audio
has.
recording. I have an audio
See, I
recording
told you.
of a
We want
global
a
industry leader.
Subbu, I am this thing going to ask you for the percentage of those sales, because and even Ajit should ask, because we were see we are part of that conversation. You cannot keep the entire proceeds.
And Leslie,
No,
think about that industry leader who is referring to. He's also wanting a percentage. We all have our
obviously, yes.
percentage set.
Yeah, he's a billionaire several times over, but I'm sure he will definitely want a percentage of that.
But Ajit, another interesting question, because I was looking at some of the when I was doing research on the subject. There's some of these blockchain experts were saying that the problem with this NFTs is that most NFT platforms store the metadata off chain or the side chain or whatever you want to call it.
Correct.
And if the metadata is not stored on the blockchain, then the thing is that the NFT could lose value, because if it's on an external storage server.
What I would encourage you to think about is when the microcomputer became popular in the early 90s, it could also be late 80s. Uh, the first commonplace application of it was to do financial accounting. So, move books of account to that. Why this answer is related to your question, while it might seem unrelated, is that the first application of technology tends to be to do things which were anyway being done, but do it with tech. But the next evolution comes in doing things which couldn't have been imagined without technology. So take the case of this metadata being offline or off chain. Suppose I make a painting, and again, it's rather limiting to think of only art as that which converts to a non-fungible tokens, but that is taken the lead. So let's go with that. And it's a painting of a woman sitting on a chair next to a table, and there's a window in the background. This is, by the way, not a hypothetical example, it's a real example. And what happens is that we code this NFT such that what is seen through the window and what is kept on the table is actually in the author or the painter's control. And what the face of the woman actually is in the control of programmatically, again off chain, but the overall thing is the framework or the grid is basically been online. Now the painter could every day, based on his or her mood, go and change that, which means the non-fungible token you're looking at, this picture could actually change every day. This is happening today, right? Now this was never possible in a pre-digital era, where you actually buy a painting where the painter is actually keeping up to it. So if Donald Trump is no longer president, that person puts something into the window to represent today's reality. Or if it is Christmas, there is a Christmas tree in the picture. So these sort of things were never possible. So the fact that you may write the metadata on chain or you may not write actually creates more opportunity to use or let us say consume the non-fungible asset in different ways. So it's a good thing.
Yeah, but this is also giving an allied thought, basically, because you have AI writing its own code now. You have GANs, basically, you could use GANs, and GANs are becoming, so AI is becoming an artist also. So imagine AI creates an art and then sells it as a non-fungible token. You're going to have some kind of wackiness out there. Wonder who will get the royalty, who will get the money out there.
No, see, the entire area of generative models, which is not very new, but it's only a few years old for it to have gained so much acceptance. frankly, we could even replace journalists, writers, book authors, painters.
Oh, yes,
All
yes.
of these professions are already history because artificial intelligence will do this now.
Yeah, I know we did have that conversation earlier also. Well, I hope it doesn't happen in our lifetime and everybody will just wish the same as we go on go forward. So, so viewers, we've had a lovely conversation with Ajeet now, and you also know that Subbu has expressed his desire to sell some NFTs. So, watch out for the space. Uh, so we discussed cybersecurity, then we segued into blockchain and security. We spoke about the Solarwinds, the whole on-premise versus the hybrid cloud kind of debate that we had. And then, of course, how blockchains can help in the entire cybersecurity space. And then, of course, not to forget the value of NFTs. So thank you very much for being a patient audience. And if you like, please subscribe to this channel, and hope to see you all next week. Thank you.
Thank you.
Thank you,
Thank you,
Subbu.
Ajeet.
Thank you, Ajeet.
Thanks. Bye.
Yeah,
Thank
yeah,
you.
yeah. Just one.
Thank you.